Hello everyone, this is Shlok and today we're discussing the biggest current affairs topics of the fourth week of March 2025. Quick, sharp, and to the point. Plus, I'll be sharing my interview takeaways on some of these topics. So, without further ado, let's get into it. Our first big story is what is India's plan in order to Trump proof itself. And the big news here is that India is considering tariff cuts on 55% of US imports. The biggest news here is that we want to get into Donald Trump's good books and reduce the impact of the trade war on India. We want to make sure that the tariffs do not negatively impact us and that we come out of this trade war relatively untouched. Our goal is to protect our exports, make sure that the US does not charge high import tariffs on the goods that go into the US from India. Now, one very important question is how will this affect Indian businesses? Competition could get tougher for local manufacturers. Some might need to adapt or innovate in order to survive because US firms, as you can imagine, are going to be slightly ahead of us in terms of technology and innovation. But it could also attract more foreign investment. So, why you may ask is the reason is that if an economy is more globalized and has fewer trade barriers, investors see it as a more favorable destination to invest in. So that is one aspect that we must be aware of. Let's connect this quickly with something we've already discussed in a previous current affairs video. Our trade surplus with the United States is close to $46 billion, meaning we get more foreign exchange from the United States than we give. And it becomes very important that we avoid import tariffs on our goods in order to maintain this surplus. So that's a little bit on the first story. Our next big update is for gold investors, and the news here is that the gold monetization scheme, or the GMS, has been withdrawn by the Ministry of Finance. Let's take a quick detour and understand what the gold monetization scheme is. The gold monetization scheme is a scheme whereby the government attracts not only households but also institutions and organizations to deposit their gold. And the reason why households and institutions would want to give up their gold is the fact that they are assured interest on it. But the first question that came to my mind was how was the government making money on the gold that was deposited? The simple answer is that they sold the same gold back to other people, other jewelers, essentially reducing our dependence on imported gold. So that is the first very important aspect. So that was the main logic behind the scheme that would reduce the import burden of gold on India. The next question we should ask is why is this scheme being scrapped? The reason is because it wasn't really a huge success. People did not really want to deposit their gold with the government because of their emotional attachment. But that's just one reason. One major reason is also the fact that people look at gold as an asset that hedges against government uncertainties and stock markets as well. And if gold is also deposited with the government, people feel that their only hedge is also now taken away from them. So because of all these reasons, enough momentum couldn't be generated from the scheme and it is now being scrapped. Let's jump into the next big trend, corporate demergers in India. Major corporations like ITC, Raymond, Vedanta have announced demergers. Now we've all heard of mergers, but what exactly are demergers? Demergers mean big companies are separating business divisions into independent entities. But why would they do that? The first big benefit is that it gives those businesses a sharper business focus. Each unit can now operate with more clarity and efficiency. That's the first thing. Secondly, better investor interest. Focused businesses often attract specialized investments because imagine if you were an investor and you only want to invest in one aspect of the larger corporation, you would now have the option to do that. Now let's jump into which companies are doing it. The first one that's doing it is ITC. ITC demerged its hotels business. The second is Raymond. Raymond has spun off its real estate arm. And the third one is Vedanta. Vedanta separated its verticals for better investment appeal and they have separated into four different entities. So that is one important update. So what is the big takeaway here? This shift signals that Indian companies are moving towards specialization and the market seems to be responding positively. What should be our interviews takeaway from this? This gives us an example into major upcoming trends in the Indian stock markets so we can show to the panel that we really are in sync with how the markets have been shaping up lately. Our next story is a big update for Indian tech startups who have raised $2.5 billion in the first quarter of 2025. And this $2.5 billion is an 8.7% rise over the previous year. And this is a huge milestone, especially considering the global challenges in terms of losing investor confidence. This was mainly because of the trade war and falling corporate earnings. So despite that, startups have been able to raise a huge chunk of money. So India is now the third most funded startup hub after the United States and the United Kingdom. But what does this actually mean? First, this is a huge confidence boost for India's startup ecosystem. When funding is tight worldwide, this level of investment shows that global investors still believe in India's long-term growth story. Second, this means more jobs, more innovation. As startups are getting more funding, even today, they're building the products, services, technologies that will play a very important role in the upcoming decade. Now, this connects to the bigger picture. Even though S&P, which is a credit ratings agency in the United States, slightly lowered India's GDP forecast, India still remains the fastest major growing economy. So that's yet another big win for India. And we can also mention this in our interviews that despite the pessimistic economic scenario right now, things are starting to get better overall. Our next story is Niti Aayog's spokesperson recently said, and I quote, US reciprocal tariffs may create huge opportunities for India. So let's take a quick detour to understand what the Niti Aayog essentially is. The Niti Aayog stands for National Institute for Transforming India. So what exactly is this, however? This is Indian government's policy think tank. Now, what exactly is a policy think tank, you may ask? In simple terms, a policy think tank advises the government on policies and economic strategies, and it plans long-term development for India. Now, coming back to our main story, why is it that Niti Aayog is thinking that US tariffs are going to benefit India? The reason is simple. China, Canada, and Mexico account for close to 50% of USA's imports. And these countries are being slapped with 25% tariffs, close to 25% tariffs. Different rates apply to different countries. But now, even if India is slapped with reciprocal tariffs, our overall tariff rate is definitely going to be less than the countries that I just talked about. This gives us a competitive advantage in terms of pricing. So this is very important for us to understand. What is our key interview takeaway? The trade war may not be all bad. However, if we play our cards right, we could turn the crisis into an opportunity. So this also aligns in a way with our Prime Minister's message, who says "Aapada ko avsar mein badle." So that's what India is going for. The next key update is the widening of India's current account deficit. So first, let's understand what current account deficit is. Current account deficit basically represents the shortfall when a country's total imports of goods and services and transfers exceeds its total exports. So essentially, simply put, what it means is we are spending more than we are earning. So India's current account deficit increased to $11.5 billion in October, and it was $10.4 billion in the same period last year. So what does this tell us overall is the big question. A rising current account deficit can put pressure on India's foreign exchange reserves. It weakens the rupee. This is something that we are already seeing in action for several months now. It also signals that India is importing significantly more than it is exporting, which can impact the economy in the long run. But if you look at the bright side, the current account deficit has dropped from the second quarter of 2024-2025. This suggests that some stability is returning. So overall, this news brings in a mix of both positive as well as negative updates. Up next, I'm starting something new. I'm starting a new segment in almost every video that I'll be making, which is called MBA in 1 minute, wherein I'll explain one concept of business and management in close to 1 minute. And today's topic is headwinds and tailwinds. Now, we've all heard a lot about entrepreneurs and investors and news articles talking about headwinds and tailwinds. So what exactly is this and where does this come from? Let's quickly jump into where the word essentially comes from. The word essentially comes from the old ages, where sailors used to sail the sea on boats using winds. And the kind of winds determined how easily they would be able to reach their destination. The first kind are your headwinds, meaning wind blowing in a direction which goes opposite to the direction that we want to go. And similarly, on the other hand, we have tailwinds, which means winds going in a direction where we want to go. Now, let's understand this in the startup context. Headwinds are the obstacles that could slow down a startup's growth. This could be funding issues. For example, it could lead to a difficulty in raising capital. There are regulatory hurdles, stricter laws, compliance requirements, and so on. And last but not the least are economic downturns when businesses and people overall spend less. On the other hand, however, startups could also face certain factors that could boost that their development. These are called tailwinds. Some of the examples are government incentives. For example, solar power startups got a lot of government incentives in order to fast track their growth. There are changing consumer trends, more demand for products and services, and so on. And there could be an increased amount of investor interest could also be there in a certain startup sector, that could lead to more VC funding flowing into that sector. So startups experiencing strong tailwinds can scale faster, gain a competitive edge, and so on. So if you're discussing startups in an interview, analyzing headwinds and tailwinds, and even mentioning these terms helps you make an impression on your panelists. It shows your ability to evaluate business environments and highlights that you understand real world challenges, opportunities that startups essentially face. All right, guys. So that's a little bit from my side. Do let me know your feedback on the new segment that we've started. Also, some new content ideas are going to be coming up. I'm also going to be talking about how we should occupy our upcoming 2 months before our MBA starts. And I'm going to be making a lot more content related to CAT 2025. So if you haven't subscribed already, please consider doing so. Share this with your friends who may find it useful. And with that said, that's a little bit from my side, and bye bye.